Hello, everyone. You did so well. You all passed. Yeah, that is good. We have an average of 62%. So what I'm gonna do now, one, I'm gonna go through the most difficult questions and just so that everyone is on the same page. And then when we're done with that, we will then discuss SARS, income tax and value added tax, and what has been your challenges and where have you got confused between the two. And then we will then wrap it up also with a quiz again and test it and just make sure, and then I reiterate whatever that has come through. So let me go through the discussion. Welcome back, everyone. Please just make sure that those who have not finished, you do finish. And also, guys, join the WhatsApp group so that as you're picking up things that you want to ask, you can actually go through and ask those in the group. I'm opening up my report. 1 second. And by the way, you might have had time to think about certain things. Please also share what was your questions or queries so that we can be able to assist you. Anything? Do you have any questions or any other thing that you would like us to discuss on what we discussed in the morning? I'm just opening up my settings. Denise, would you please assist me log in and share the top 3? I thought I had made a note of the top 3 most difficult questions that had low marks. You will get them on reports. Thank you. I am looking at everyone, the chart, guys, so that I can see if anyone has made any comments. Okay. Hi, Lindy. Okay, guys, please make your comments on the chart again so that we can be able to address any of the issues that you might have. Okay, there are no comments. One of the areas I think it was slightly confusing was around who really makes decisions in the business. And most people thought it's the shareholder. Think about it, as I said, in the GSE, the shareholders only meet once a year, right? To approve the financial statement, to see, for the directors to present the results. So it's not the shareholders that make decisions, it's the directors every day, they are making the decision. Of course, the shareholders, they make the decisions when it relates to the issues, but because you have not separated the shareholders' role and the director's role, then it seems as though it's actually the directors that make a decision. I mean, it's the shareholders. It's not the shareholders that make the decision. The directors generally represent the shareholders. That is why in other board of directors, you will find that there are directors that are representing a specific shareholder because they are appointed, they're representing that shareholder in that. I'm sure you've heard about in government, ESCOM issues and stuff, board, the shareholder always is the one that appoints the directors. And then whether that is a public entity or whether it's a private company. So maybe the question we should be asking ourselves as entrepreneurs is that, are we the right people to drive the business, to manage the business? Maybe you needed just to be a shareholder only and not be a direct. Or maybe you needed to be a director but not being a shareholder because maybe you don't have enough money to actually build the business up, because being a shareholder does need you to contribute into it. Obviously, you can contribute by time, but mainly usually it's money. Okay, so there are certain people that are asking several questions. No problem. If you have missed the first session, we've already actually submitted the audio, which is gonna get loaded on YouTube, but also we will make sure that the charts and the questions, we answer them. We're gonna re-answer them word by word, which then allows you to just re-look again if maybe you might have missed anything. And again, make sure you are here because somebody has paid, but that person who has paid would like to make sure that they are spending the money on entrepreneurs that are Black businesses. So make sure that your BE certificate is submitted. You should all of you have had a valid BE certificate. So yeah. So as they're saying, the confusion is that they're still confused that we are still directors and shareholders at the same time. That is true, Esther. You are, but you have to start separating it, because you see, as a shareholder, you're just an investor. You're an investor. Whereas a manager, you are then responsible for the decisions that are being taken and how those get executed. So you really have to separate your roles and responsibilities as entrepreneur. And the only way you can actually do that is to have session with yourself, which you start categorizing. Am I playing a role as a shareholder here, or am I playing a role as as a direct? A shareholder is an investor. All they care about is that, am I gonna get my return on investment? And the return on investment on the shareholder is dividends. And then as for director is that I've been given this money. If I've been given 2 million, can I return back another 2 million? Or am I losing this 2 million? I'm actually gonna end up making the shareholder lose his initial investment. Because if you do not have that separation in mind, when it's time for you to move away from this business, you're gonna be too much invested and emotional attached into this, because you're gonna actually think and believe that there is no decisions that can come to actually dissolve this, because you can't see those two as different. I mean, for me, I also think you have to think about, if I had taken this money and effort to another type of business, will I have received my return on investment? Whatever investment you have made. I think one of the biggest challenges we generally have is that we as shareholders, we do not account for the time and the money that we have actually invested in the business. So then it ends up being difficult as to how you will actually build this. And understand that the shareholder is not involved in the business on a daily basis. They are only involved in the business once a year, or sometime during the year when they need to do certain things. That is going through the financial statement, the AGMs, and also certain general meeting, which amends certain things in the director's arrangement that changes. Maybe you want to sell majority of assets. Maybe you want to change your strategy. Then you can involve the shareholders. But every decision, every little other thing is the directors. Okay, Denise has not posted anything. May I request, Denise, that I'm not sure this. Okay, we're having a small, tiny. Okay. Okay, perfect. Remember, a shareholder is an investor, and all that director is actually just doing is executing the mandate of the shareholder. The less direction the shareholder have, the less you're gonna get in terms of your return on investment on whatever assets that you have. Okay, I'm going through some of the questions and the notes, and I'm gonna also, Denise, I still, Bonolo, I still don't have the results of the 3 questions. I think it was question 5. I still don't have that. Okay. Okay. I'm gonna just hope that they're gonna post those soon enough. But in the meanwhile, let me allow people to share their experiences for them. Okay, Bonol is having a technical problems, though no problem. Duman is asking, whether would it be then necessary for me as board shareholder to issue myself with an employment contract? I personally feel it's not necessary if you are both a shareholder and director, not unless you are married in commute of property. Your partner, you have accountability partners like your partner, or you have an advisory board. Then if that's the case, and you make sure that that employment contract is got key deliverables, then it's going to help you to be more accountable. But if you don't have an accountability body or advisory, you don't have board of directors, you also are not married in community property, whatever that you do is just for yourself. Tie maybe your employment contract with your New Year's resolution into your business. But still, the accountability is not going to be as strong as when somebody else is actually holding you accountable. Okay, they are having technical issues. Okay, guys, I think it was number 5 and number 9 in terms of questions, but it's also around the shareholder and also directors. Guys, please share your experience in the morning, and let's just break the ice with that. What did you learn? What are your actions that you're gonna need us to assist you to implement? So Bonola's got the question. Thank you so much. Question number 1 out of its 3 questions that most people didn't get right, that were difficult. Question number 1 is, how do shareholders get paid? Most of you answered dividends. Yes, they get paid in dividends, but also when they sell the business. So it's all of the above. And then number 2, how do decisions get made in business? Decisions get made in 3 areas. 1, it's a memorandum of incorporation that will articulate specific decisions that have already made. It will also be the policies and procedures. It will also be resolutions. The 3rd question was type of resolutions. Which one is incorrect? The incorrect one was general resolution. We don't have general resolution. We have ordinary and special. You can't escape. You either is death or taxes. Those are the things that we cannot actually escape. And taxes apply in different countries. Some are high, some are low. I think in general in South Africa, our taxes are high. I personally believe and think the taxes are high. I think it's also because we also know how they use the money for the taxes. As much as they do use it well in other instances, but it does generally feel as though the taxes are high. And one of the reasons why maybe, especially the middle class, usually feel the taxes are high is because we still have to subsidize education, health, transport, and we also have to subsidize other services which the government is not, like security, which if the government was doing its part with the little taxes that they get, then we will not need to compensate by actually getting private security. So those is one of those issues that we generally then, I guess, is in people will feel as though we are struggling in dealing with. So now let's just go through in the details. So as a taxpayer, you pay at least two types of taxes. There's a value-added tax, which is called VAT, and there is an income tax. Within the income tax, there is another tax that is called turnover. Now, turnover tax is still part of income tax. It's not separate from these, from income tax. It's just an additional structure, like a donation tax, like an estate duty tax. Those are all part of the Income Tax Act. So the VAT is basically, it's got items again, which we call exempt. There's certain items, for example, if you go and buy beans at Pick and Pay, beans would be zero rated. But when the beans are cooked, they will now be taxable supply because there has been things that has been done on them. So that is what value-added tax is about. So the income tax is based on the income that you generate, whereas the VAT is based on the value that you have added. And I will explain that in just now. So what do I mean when I say the taxes that get applied for the value-added tax is just for the value that we have added? It means that you will go to your business and you will buy things. And the things that you're gonna buy will be maybe raw materials, will be maybe stock, will maybe labor, all your cost that comes to your business. That is what we call input. And then you take that into your little business here. And you do something in a machine with your team, whatever that you do in your business. And then you will then produce, which is your output. And when you have produced that, you will then sell it, whatever that you have produced. Value-added tax is then charged on the value you have added when you did things in here. And the way it works, it's a collection tax when you are charging someone you are selling your products that you have produced, you will then charge the VAT if that item is a vetable supply or taxable supply. And you will collect that amount. When you collect it, it does not belong to you, it belongs to SARS. But before you do that, you will look at what inputs did I put in that had VAT in them. Then you will take out. That is why the VAT 201, which is the return that you have to complete every month, you will need to actually say VAT output less VAT input so that you can pay whatever that is left to SARS. Now, there has been instances that clients will approach me and say, Precious, SARS owe me a lot of money. Can you please assist me and help me to actually get a refund? Already by principle, I'm running away. I'm looking at that person and say, here is the crook. Because if you really think about it, there is no business that is sustainable that will actually spend more than what is generated. Because if that is the case, there is a money laundering in here. So value-added tax, it's a collection tax. You will always have to pay SARS. And when you are not paying SARS, it would be because in that month or in that period, you only had more cost, but you were preparing because you are expecting to have a selling, more selling maybe a little bit later. Now, with income tax, it's slightly different. Income tax is charged based on the person or entity. And the person is the age that they're at, plus also the income bracket. As a South African citizen, our taxes are progressive. What do we mean when we say progressive? The more you earn, the more the rate gets higher. I mean, there are people that will earn 100 Rand and the government will take something like 45 Rand from that 100 Rand. And in other instances, even up to 50%, depending on the tax brackets that income is at. So the income determines the tax bracket. And then the age in terms of, are you above 65 and above 75? So in between and below 65. So these are the categories that exist within our legislation. Now, for entities, again, it will depend whether is it a trust, is it a company, is it a small business? And a small business, it must be below 20 million. Anything above 20 million, it will automatically, the tax rates there will automatically be between 28%. The trust is 20%, but there are special trusts that are set up that can actually be charged the same as person, depend on the trust deed. Now, let's throw down some comparison of this so that we can have a deeper understanding. This thing is falling, oh Lord. Okay, let's have some comparison as a taxpayer. So here we're going to have value-added tax. And here we're going to have income tax. Okay, then we draw here. So first thing, for value-added tax, you need to register when you are above 1 million. For income tax, you need to register the day you become what? Operational. Before, they used to make it the same registration when you're doing company registration. But I think over the years it has changed. I think they are now moving back to something similar like that. But the day you become operational, you will need to register for income tax, especially when you want to actually formalize your business. Please note, for you to register for income tax, you need to have the business bank account. And that is a trigger to say if the business is now operational. Number 2. Oh, so there has been questions around pressures. There are service providers or companies that will say we need it to be a VAT vendor. So you can agree to register earlier, but you will have a lot of problem with the commissioner because SARS can actually refuse to register you if you are not meeting that requirement. One of the reasons why is because it costs a lot of money to administrate that arrangement of being a VAT vendor. What you have to understand is that for you to comply with that arrangement, that client must be promising you $1 million. Actually, in most instances, you will end up going back and forth with SARS if you actually are not above that, but you also don't understand what documents need to be included when you're doing the application. When you're doing the application for registry for a VAT, as a VAT vendor, you have to give them at least 3 of your invoices that you have recently generated so that they can check and make sure that the way you have designed your invoices does comply with the legislation. Again, on the module, I have articulated what are the things that you need to make sure are actually on your tax invoice. Number 2, you also need to show that you actually have either reached the 1 million or you have a contract in place that covers $1 million. The other requirement that they want to see your bank, a copy of your bank statement, the recent 3 months bank statement. And they also want to make sure that the person who is doing the registration is actually authorized. And that is important in other instances when they have other questions that they would like to actually ask you. So that is basic things that they will generally need. They are allowed to ask additional other things that they believe or think that you should actually be providing to them. And also, please share your experiences with SARS. What has been the additional documents they have asked you? Please remember, one of the most difficult things with SARS is that before you submit any document that you need to submit to them, just go through their website. They changing their regulations and their things that they need all the time. So just make sure you first go to their website, be clear. They usually have a checklist. Make sure you're clear about what should be. You have a checklist, but what is entailed in that line when they say bring a tax invoice. Understand what that means and make sure you comply with the things that they mean so that you do not have the back and forth. I had a client recently. He's still a client who came through another big business as a supplier, whom said for the past 6 to 12 months, he has had 3 consultants helping him to get registered for VAT, and he had failed. And we were the only one who actually managed to get him to actually get registered because he kept on going back and forth, and no one could actually give me a straight answer on why that information was rejected. And guys, sometimes it's something as small as the wrong date. I mean, that how much they analyze that form. Okay, so that form that they use to register is called VAT 101, and then the income tax one, I forgot the name of I think it's IT 77. That's an application form for income tax. Okay, number 2, the tax rate that gets used for VAT is 15%, 0, and exempt. Okay, so exempt or 0 exempt is the one that it does not have any implication of it, whereas a 0 rated, it does have, it's 0, because that does have an implication if it's a taxable supplier. Again, you should know which are your taxable supply, which ones are not. And if you're not sure what are that, I think I did do a list in the book. If you don't have a list, I can also just make note of it and provide it to you. A list of the things that are exempt and the list of the things that are zero rated and the things that are actually taxable supply. So the value added tax, we use 15%. It used to be 14%. The past 2 years, it has been actually 15%. For income tax, it ranges from 0 to 28% maximum. As I said, it depends on whether I'm dealing with a human being, which is an individual, a person, or I'm dealing with the entity. When it's an entity, it will be up to 28%. And as we're doing this, we're looking at you as a company, okay? I'm not doing income tax for individuals here. I'm doing it as a company. If it's an individual, then this will actually be what? Up to 45% or up to 45%. Okay, so the returns need to be completed. So you've registered, you now know which items, and most of these things are also set up on your accounting, on your charts of accounts. So your accountant will assist you also in making sure this is right, but you can also check it. You are on training, that is why you're here, to get used to these things. So you should be fine. And then number 3 would be now, what are the returns that we have to actually complete on regular basis? So the returns that we complete every 2 months or once a month, depending on one, are you a delinquent taxpayer or not? If you're a delinquent, they might actually, for that, ask you to submit the returns on monthly basis. If you are not, they will actually categorize you as either a B or C. And there is D and F, that is farmers, that is also real estate companies that are generating income in terms of investment. They will do once a year. But for a trading business, it's every 2 months. You will either be a B category or a C. B and C just means that the other one ends in end of February, the other one will end in end of March in terms of the cutoff of months. And when I say it's every 2 months, the way that works is that you run for 60 days, then you're expected to pay on the 90 days. And I will explain that in more detail when we talk about being a trader, because it also talks to your terms and conditions. And I know most of you struggle with a guy called cash flow. And one of the things that get you is this. And I'm saying to you, when you look at how it's planned, it's actually a 90-day arrangement, but we end up not fulfilling our obligation as entrepreneurs on this one. So the returns that you have to complete is what we call VAT 201. That VAT 201 form is basically showing receiver of revenue, how much did you sell, and it's also showing them how much did you spend. And then whatever that is left, you pay over to them. That is your VAT 201. And then for, and which means this needs to submit it 6 times a year, right? Because it's every 2 months. And then you have income tax. Income tax, you have to submit returns twice. The first one is what we call IT 14. The other one, we call it IRP 6. Okay. The IT 14 is the one that you're gonna attach the annual financial statement. That is what we call IT what? 14. income tax form number 14. And for RP6, we're actually submitting a mid-year, a 6 months. So this is full year. This is a full year. That is why it's accompanied by financial statements. And this is just 6 months. They generally don't want any supporting document, not unless they believe maybe there's been too much changes in your business that they cannot actually estimate. So the next one that we need to actually discuss is that when you have done the submission of your returns, they do assessments. And these assessments, when they are doing them, they will then form whether it's a liability or it's a refund. And please note, when it comes to value-added tax, you will get a refund. But when it comes to income tax, when you have made losses or you don't get a refund, what happens, the losses that are kept on the books and they kept being carried off, they will only be showing on your financial statements until the day the business start making profit. Then you can start having a taxable income. Because the way this gets charged, as I said, the way you work out the VAT here, it works out on saying what you pay. You only pay when the cost, which is your input, is less than, right? Is less than your sales output. Okay, that is when you pay. Whereas with income tax, we pay when the income is above the deductions that are allowed. And the deductions, again, guys, it's actually the cost. The deductions are costs that you incurred to produce that income. And then now you will pay. These legislation, Income Tax Act and Value Added Tax Act, they actually are administered by Receiver of Revenue, which is SARS, but they are governed also by another legislation which is called Tax Administration Act. Tax Administration Act is an act that charges penalties and interest. Penalties is generally charged at a minimum of 10%. And interest rate, depending on what the commissioner has, this get announced annually. And depending on what you have done, if it's a return, they will charge you 10. But if you keep on doing the same thing, this penalty can actually move even up to 500%, depending on what you've done and how often you do that thing, whatever that thing that you have done that is wrong. And that is why you can end up having people that are paying taxes that are way above what they should have paid, because it ends up being the penalty is the capital portion that you owe plus the penalties plus the interest. And the interest is charged daily. Daily, the interest gets charged. So that's it when we're talking about the difference between income tax and value-added tax and the principle around it. Understand that value-added tax is about the value that you have added in the business, whereas income tax is about how much income have you generated in relation to how much did you spend to earn that income. I can see there's so many comments. Let me have a look. Excuse me. Okay, I've got you guys. I'm looking through. Someone saying, how long after your first million do you apply for VAT? You don't wait. You don't wait. The day, actually, it's better to maybe when you are closer to 900, start actually collecting the information. Okay. Quite a lot of people that are interested in advisory. That's good, guys. Linda will say, I'm so glad you asked the question about the UIF. I begged you to apply for relief fund. I was previously employed and I didn't get my UIF because I resigned. Now it was asking for my UIF number. So you can actually call your previous employer to give you their information that they has been submitted. But because of ID numbers, they should be able to pull up your UIF number. At least pull up the employer number, get the employer number so that they can see that you did contribute, Lindy. Denise, you're saying there's a glare on the paper. It's because the reflection is the light, guys. I'm gonna try, it's the light because I've got my own light to improve the lighting, but we also have the chandelier to provide more light. Let me know if you can't read it. I am also gonna take pictures of the notes and share them on the WhatsApp group so that in case you have missed anything. Apologies for that, Glenn. Esther saying that it starts to get interesting. I believe we're gonna gain a lot that we've been struggling with this topic, of course. Thank you so much for the feedback. If they ask me to bring audited financial statement, I'm still growing. I can't pay an audit. What must I do? Okay, Esther. Esther, you have to understand, first of all, not all companies need to produce audited financial statements. I think I produced my audited financial statement in the first 2 years because at that time, my business was still a registered auditing firm, which means it did need to actually be audited because I was auditing other people, but also my plan at that time was to sell the business. So guys, to get audited or not audited, it's actually part of the stuff we're gonna do together. Let me tell you, Esther, which page you should read, because what determines whether your company needs to be audited or not is what we call public interest. Public interest score is the one that tells you if you need to actually be audited or not. And it must be at a certain number at the financial year end for you to decide whether you're going to audit or not. Just make sure also that you understand audited does not mean you need an RA like me. It might just mean you need an accountant to issue an independent review. There's different types of assurance within that you can provide that does not need an audited financial statement. Okay, I'm gonna give you the page to get more information on audited financial statements from the book. Okay, it's on page 161. Page 161 and page 162 all the way to page 165, including up to 167. It actually explains to you what are the different type of assurance that you can get. And I love page 168, again, still on the book, where financial reporting services is explained here, guys. It's explained on what assurance do you need and which standards apply, which then also tell you which accountant do you need to actually do the work? Because not all of them can produce audited financial statements. And this balance, the public interest score calculator is also included on the book on page 169. So have a look, guys, at that to just have more understanding of what you need. You don't need audited financial statements. Again, make sure that your MOI, your Memorandum of Incorporation, does not say you must produce financial statements, because that's another thing. Because you don't read the document, you then sign the MOI, some person did it for an NPO, then you did it and then you change your PTY, and then now it's saying audited financials, then they will ask you for the audited financial statements. Okay, I hope I was able to answer you, Esther. Okay, I'm going to the next question. Okay, so Dinero is saying, how is being operational defined? Because as a business, we are currently doing a lot of marketing and branding, but we have not sold products that we create as we're making sample now. Does that mean we're operational? Yes, it means you're operational. So operationally, in terms of what they have established as a practice over the years, has been you actually have an active bank account. Your bank account, even though there's no money coming through, but you are servicing the bank account. That is what they have used in general as being operational. When you're marketing, guys, you are operational. The fact that you have not converted the marketing to be a sale, that's another story altogether. Maybe I need to come Dinero and give you some hints on sales. I do actually got quite a lot of people that provide sales training that can actually assist you to make sure. But also, you guys, when you are doing a lot of marketing and there is no uptake on your products and your offering, you could be selling to the wrong person the right product, or you could be having the wrong product selling to the wrong market. Okay, so is there a tax specific to an industry? As a farmer, there are any taxes that are unique to the agriculture sector? No, there is no specific. There are like in the motor industry where they get charged carbon taxes, but you don't have industry taxes. So you don't need to worry about that. There are no extra taxes. What they have done though is that farmers should not have a burden of administration, because your production timeline takes longer. You see, in my type of business, I can think of an idea today, tomorrow I implement it, and I'm selling the following day. So it's got a shorter time. Whereas with farming, you're gonna need to plan. Then you're gonna wait another 3-6 weeks before something comes out. So the production period is longer. And that is why they have felt that for farmers, they shouldn't be submitting their returns all the time. They should be submitting the returns at least once a year. And if maybe someone has quite a lot of production, and then they can be every 6 months. Okay, Batabile, hello girl, is asking, can you still choose not to register for VAT even when you have hit 1 million mark? No, Batabile, we cannot. That will mean we are evading tax, and you can be prosecuted because you are actually not declaring accordingly. So far, they have not been so stringent to make sure they make you pay. But I've seen in other companies, they will tell them, complete the return as though you're already, because they are saying that you actually were evading tax. So just be careful, guys. Always do the right thing. Rather not do the right thing because you didn't know. Now you know. When you hit 950,000, 900,000, start pulling up the information, understanding what do you need to actually submit. Okay, someone says, please, Precious, explain point 4 on the income tax again. Okay, no problem, I will do that. Tax is an animal. I'm glad we're on the subject, and thank you for answering. No problem, Lindy. You're welcome, girl. I hope it's a girl. Oh, I know only sometimes can be even a guy. Okay. Hi, I'm listening while I'm driving. I'll catch up on YouTube. Okay, so this is Tando Gushle. Great. Bonola, please take Tando Gushle's cell number so that if he is on WhatsApp, we can automatically add him. He's driving. I know as entrepreneurs, we always multitask. Yeah. Okay. So someone has asked, I have converted from a CC to a P2L ATD, but I did not receive an MOI. Do I need to produce audited financial statements? No. So if you had converted to a PTY LTD, you will not, the document that you will have done for your CC will actually be sufficient, but you will need to bring yourself to be up to date. You don't need audited financial statements. Again, go through the pages that I mentioned earlier. You don't need audited financials. Guys, as I said, I mean, my business is not big, it's small. And I'm an only shareholders and a direct. I don't need audited financial statements. Remember, audited financial statements are for an investor, are for someone who wants to see whether the figures they're looking at are correct or not correct. I generally have this guidance that if you are building your business, you have no intention of selling your business in the next, maybe let's just say next what, 10 years or so, right? Next 10 years or so, don't bother yourself to actually have too much restrictions and compliance. But if you want to sell your business within the next 3 to 5 years, okay, have audited financial statements, because that will prove to whoever that you're selling that your books are clean and they can rely on what you're actually talking about. Shire has raised her hand. Let me just allow her to speak. Okay, Sisi, go ahead.
Okay, thanks, Precious. On the income tax, let's say, well, I'm on services, I offer professional services. If I need a laptop, is it best for me to buy it on installment so that I can now quantify my inputs, or what happens if I buy it cash? So I've got an expense that's coming out as a once-off, and then I continue to service my clients. How does that work best for me? How does this then work best for me?
Okay. For income tax, it doesn't have any impact because the expense that you have incurred of the, okay, first of all, you're gonna need to choose. Maybe let's just go with one option. Option one, you decide I wanna buy it.
Yes.
Right?
Yes.
When you're buying it, the VAT will kick in because you can claim a VAT input on that asset. But it does not affect your expenses. It will only affect your income statement when you are now depreciating it at the end of the year, because in this case, you are buying an asset.
Okay.
So when we depreciate something is when we are reducing the value of it based on the use.
Okay.
Okay, so your accountant will do a depreciation for your asset, and your asset will continue sitting there, and you will have claimed whatever amount that was your VAT input when you bought it. The amount, the 100 rand of that, let's just say you bought it for 115, the 100 rand will be sitting on the asset, and the 15 rand you will claim it back, and then that's it. And then at the end of the year, if that asset, maybe you want to keep it for 5 years, they divide it by 20% or 5 years, then you will then depreciate it.
Okay.
This is the option when you are buying. Now let's talk about when you are actually renting. When you are renting, you are actually paying on monthly basis. Then that goes straight to your income and expenses because it's a lease. It's a rental lease.
Okay.
So a rental lease is an expense into the business. The whole amount will actually be what? Put in the remove VAT again on it, like we did with the 89 rand.
Okay.
And then that is deductible again for income tax. And the VAT portion of that, which in this case was the 7 rand, then that 7 rand reduces your VAT money that you need to pay out.
Okay. Now my challenge is I'm not VAT registered.
Now, when you're not VAT registered, have you reached the threshold we spoke about, or are you close to the threshold?
A bit far from the threshold. So
don't stress then about VAT until such time, because you are not allowed to claim for VAT if you are not a VAT vendor.
Yes, yes.
Only a person who's a VAT vendor that can actually claim for VAT.
Okay.
Yeah.
Okay. Again, is this 1 million cumulative over the 12 months?
Yes, over a period of 12 months. And the 12 months, SARS does not look at your year of assessment. They look at within the period of 12 months, have you accumulated the 1 million?
Turnover.
Yeah, turnover, yeah.
Okay.
Sales, income.
Yes. Okay.
Okay. Thank you so much, sis. I hope
Thank you so much. Thanks.
Okay, who else want to ask questions? Let's see on comments. Shame, people are struggling. The network, the recording, people are experiencing the network is always bad in the evening. Okay, no problem. Don't stress. We are recording, so we will send. And if there is stuff missing in the recording, I will try to do another recording. Okay. Please share your experiences when it comes to income tax and VAT. What has been your biggest challenges? And let's engage. Let's see whose hand is up. Overking says, just a comment. My biggest problem is information given by our accountant. Now, the accountant is giving you information that is not right. But just remember, any person who provides you with an advice is just an advice, or even if it's consulting. The best way of doing it, just go to SARS and get the information yourself. I think that would be my best advice to you. And attend sessions like this where we don't have interior motives to crook you up or anything like that. Okay, Obagang, let me allow you to speak so that I can hear, because I'm losing the last sentence, the last bit of the sentence.
Hi.
Hi.
So one of our biggest problems with our accountant is that they gave us information. You need your in the past 3 months, you need invoices, proof of address, you need this, and that. And then we took everything, and then when we get there, she says, no, you need 3 invoices per month that show. But then we were like, no, that's impossible. SARS cannot force you to have 3 invoices if you didn't issue 3 invoices in 1 month. So ours was first because it was between November, December, and January.
When the
So
transactions are low.
yes, and now it's COVID, so now the rules have changed. The accountants can't go and represent us anymore at SARS. So one of the directors has to go there himself and actually do it now.
Why the accountants can't represent you? The registration that I spoke about, we actually did it on behalf of the customer.
They keep changing, but my plan now was to actually change. So whatever money we paid them for SARS, them for VAT registration, they must allocate it to another activity they do for us, and then I can find somebody else to actually do the VAT much more efficiently and faster.
Can you go to Denise privately and leave your contact details and your full name so that I can hook you up with someone who's going to assist you, even if it means they are just preparing your director to say what are the things they need to have, because we just done the registration and it was at level 3 lockdown. It was not even level 1. We actually level 3. It was level 2. And we did the registration.
Level 4. We haven't been to level 2.
No, I'm saying when we're actually still locked down, SARS did the registration when we were still even in lockdown. So.
See, I knew it. Okay.
Yeah, you knew something was not right.
I knew it, but some things you can see that they don't want to work or they don't want to put in too much effort. So they keep saying that they're working remotely and they can't do certain things. Okay, I got it.
Yeah, no problem. Just go to Denise or Bonolo's details and say, I hear my details, need support. Because all you need to do is just to get that person who's going to tell you, these are the things you need to make sure the director has.
Okay.
Okay, thank you so much.
Thanks.
Katleho says, after the session, that accountant of mine will never see me again. Oh Lord, what have I done? Please don't fire people yet. No, don't fire accountants. The challenge that you generally have is because we as entrepreneurs do not know what the accountant is supposed to actually be doing. And we also don't check. We don't even check that person. They say the accountant, what qualification exactly do they have? Are they reliable? Because there's nothing worse than having an accountant that is not available for you when you need them. So, and how often are you going to make arrangement? Does your service level agreement have a specific support that says you will have a telephone support? Because again, you guys as clients are quite bad clients. You call us any time of the day, yet on the service level agreement, there is no such thing, telephone support. Yeah. So just walk through, be very clear what are the things, because at the end of the day, the accountant is there to guide you and provide you advisory and support, but also to build you. You need to use them the right way and also know what to expect from them. And guys, there's nothing wrong also getting someone to check up on the accountant that the finances and things are right. I do not know how many times I have received financial statements that did not even balance. And I take them back to the direct and I say, what happened here? What happened here? And the person will like, what? What are you talking about, Precious? Because you yourself never read your documents. Your accountant does not run the business, you run the business. So you're gonna need to make sure the information you are receiving and you are having is the right information and is according to the decisions you made. Remember, financial statement, recording of the transaction, it's about you, how you run your business. Katla, you should attend my training session on finance. That's the one that you will actually then fire your accountant. I've actually got few accountants fired on that one. So Patrick said, I was registered, my vet was registered before I started operating. Oh, really? That is strange. I think that is when they were very easy in letting people register without actually having said. Remember before, they used to allow people to register as long as the person was generated at least 50,000, but also they have prospects. So I guess you need to change, you need to look whether you can deregister and then later register again. Again, think about the cost and the time. Someone is asking, I'm trying to read. I've answered Katleho, I've answered Patrick, but someone asked about, did COVID change anything regarding tax rules? Or how are we going to do submission in the next few months? My brother, I got an SMS yesterday, SARS telling me I didn't submit something which I certainly did. I submit, and they even gave me the refund. They're working. So I think what we need to do is that maybe, for example, if the accountant has said, I can't do the work during the lockdown, you can then ask for a relief, but you have to apply the relief of being released from submitting your returns late, i.e. in terms of penalties. But they have not provided any specific guidelines that I'm aware of. And please note, guys, I don't sit and watch SARS. They practice note like left and right. So have a look on what they have released recently in relation to returns. As far as I'm concerned, we still have to submit. I mean, we had to call our accountant to get things submitted, whether we're on lockdown or no lockdown. Oh, Lindy is saying, I saw, as I called, I think a year ago, I was told to register if I earn 3,000 to 4,000 monthly. When did it get to 1 million? Lindy, that is relating to you being registered as a taxpayer, not being registered in terms of VAT. As an individual, yes, between 3,000 to 4,000, if you earn that on monthly basis, you should be registering as a taxpayer to start paying your taxes so that you can have pay as you earn and also the UIF. Whereas when we come to a 1 million, and that 1 million is over 12 months, that is relating to a company that is a VAT. And by the way, that 1 million also applies to people who are directors in different companies. If you earn directors' fees in different companies and they add up to 1 million, you should be registering for VAT. Great question, Lindy. Okay, I hope you are answered. Okay, we're left with few more minutes. I'm gonna complete the quiz and we will circulate it to you, and Denise is gonna also circulate your evaluation, because others were able to attend the morning, others were able to attend the afternoon. Please complete it. Please complete the evaluation for both sessions so that we can assess if your understanding and the things that you appreciated, and that we can also improve how we deliver this content. Someone said, this is an empowering information. I forward my bank account to the accountant and she declares the personal loss as profits. I got into trouble with SARS for that. I told them what happened with all the transactions. Oh, that's funny. Oh my goodness. I promise you, I have received financial statements where I'm asking the director, why your remuneration is so high? How much you're paying yourself more than 10% of your turnover as your salary? And this guy says to me, no, Precious, the company is paying back the money that I loaned it. And then I said, but where is that money in your balance sheet? Where is your shareholders loan account? Guys, I'm talking about business that generate more than like 10, 80 million a year. It's crazy the things we have seen. Guys, I attend our session when I'm explaining financial statements, please, so that you can be able to read your financial statements and pick up the errors. The accountants don't even, you just send the bank statement. They will recognize the money that you put in as your contribution or your loan as revenue. You will end up paying SARS for things that you didn't make money at all, instead of creating it as a loan, because they don't understand your business. You also have not explained their business to them. I also say to entrepreneurs, keep a spreadsheet where you actually show what is the income per each month and what is the expenses per each month. And that is going to help you so that when you then send that schedule and you send the bank statement, she can make sense out of it. And guys, if you're still sending accountants bank statement, I will be worried again, because you should be managing your own finances. You're making this money, you should. Okay, SSA, on the shareholders loan account, you'll help me a lot last time, as we were not recording. Thanks. No, Esther, you're welcome, girl. You know, I've got you guys. I've got you covered. I got you. And soon you should start charging interest on that loan. The interest-free arrangements, business must produce the results it's meant to actually produce. I am running out of time now, but I wanted just to get more questions from you guys, and also just your experiences. Is everyone, I'm just browsing through all the comments. I think everyone is good. Okay, someone saying, how do we do shareholders loan account? Okay, so how do we create shareholders loan account? When you keep on putting money into the business and you have no plan of recovering it, you should automatically be creating a shareholders loan account. The shareholders loan account is like a rolling account. When the business has the money to pay, you then take the money from the business and pay and reduce that loan account. I think at some point in my business, my loan account was close to about 2 million. But over the years, it has reduced because I've had more cash in the business. So it depends really whether you are starting up or your business at that time needs a lot of cash injection. But also, I think for professional services, guys, I really want you to think of it this way. You see, when you create products and services and you're designing and you are working through, there's certain part which is research and development. There's certain part that is product development. Start really building up an intellectual property so that you can capitalize the assets that you are bringing into that business. So that there is a balance, there's a leverage. Whoever who reads the financial statement, they can see the assets, they can also see the liability, which is your shareholders loan account. So in my business, there's like today I'm an employee. But tomorrow or maybe in another day, I'm going to be spending a lot of time researching, developing new products, and that goes straight to assets. It doesn't go to an expense account. But it then increases my loan account because I've invested on the business in terms of the assets. So really think very hard about what is it that I'm doing today in my business. Am I working in my business or on my business? Today, I'm working in my business. But tomorrow, it's another story altogether. I'm working on my business. When I'm working on my business, I'm actually building intellectual property. I'm actually building up assets. I'm developing products and brands and trademarks and. Nandi loves networking. No problem. I think there's agriculture, there is professional services, there is quite a bit. We can actually organize that. We can do introductions on finance success on the WhatsApp group. Introduce yourself and make sure you build up. Someone is saying, I'm looking forward to your masterclass in financial management on YouTube. It also covers a bit of what we're discussing. Yes, it does. I've done also quite a lot of recording with other people. I'm going to start collecting all their recordings because I hate doing the recording. So, but soon I'm also going to start getting better on it and then posting more. Guys, we need your support. Make sure when you go through YouTube, you like, you subscribe, and also you share in your platforms. We need to start expanding our network. We need also to start working with each other to build each other's business. My business does not exist without you guys attending this session. Your business does not exist without services like ours to help you capacitate so that you can run better businesses and build businesses that are more sustainable. So as entrepreneurs, we really need to start give, get. Like the things we are posting also on social media, share it, consistently be looking at our content because we are posting, and sometimes we post it in bits and bits because we want you to consume things over a period of time, but engage with us. Let's work together to help you build more capacity and apply the things. There's so much work and activities that are actually sitting on the modules and things. Work through that. We are here to actually support you and be able to build up what you have already started working on. We will give you, I will post the link for the survey on the WhatsApp group. Please complete it because I think now I've run out of time and I was more interested in your questions. Okay, guys, is anyone, we are done for today. I'm looking at everything now. I think we are good. I'm gonna just, Lindy said, so happy you're talking about expanding. We need to be consistent, supporting each other, especially this day where Black business must be a priority. We can get connections to assist you. Oh, Lindy, thank you so much. Of course, guys, 60% of the revenue I earn is from you guys. You guys saying, you know what, there's no other trainer like Precious. Please give her a chance. And I promise you, 60% of our revenue is full referral on the doors who will have never even been able to knock. And guys, you know how hard it is to get to the doors into South Africa, especially if you are not interested in paying things that are not supposed to be paid. So honestly, it's just, it's a whole lot of support and we appreciate. And again, like the stuff we have, the more Twitter followers we have, the better, because we can then build up the brand. But it also helps us when we talk to the funders and tell them that actually this is the training we have run. This is how people actually shared their experiences. And so guys, thank you so much for your support, for sticking to the end. I can see actually almost everyone came back. So that is good. Bonolo is sharing our JD handle, and then she was also gonna share everything. And then I will, on WhatsApp, don't forget to join the WhatsApp group, because all the lecture notes, I will then add them in there. And then the audio, when it's up, we will remind you, we'll post it also on the group WhatsApp, just to tell you that it's now up for you to review it on the YouTube. Remember, tomorrow, when you start, do the revision. Do the revision from what we've shared on the slides that I will share, but also start the reading. The content is gonna get easier and easier. The more you hear this, the more you practice it. As I said, remember how many times the teacher taught you 1, 2, 3? It was a long time. And thank you so much, guys. Bye. Lots of love, guys. Thank you.